Hi everyone, Gianni here with you for TheoTrade, and today is Tuesday, August 5th, 2025. It's actually, in a way, a Fibonacci day. It's the eighth month, the fifth day. 5 and 8 are pretty important Fibonacci numbers, but we're not here to talk about that today. Instead, I would like to discuss some of the issues I'm actually seeing in the stock market. Now, I am someone that has been bullish for a few months now. We were very early in the rally and getting aggressively long coming out of the lows from April 7th. And it was really ever since we had this secondary higher low in late April that I've been pushing the issue to the upside. But over the last few weeks, I've been spreading the message amongst Theo traders that our primary focus should not be getting more aggressive, but instead tightening up stop losses, booking profits, raising cash, sitting anywhere across various portfolios now between like 20 to 50% cash. And I feel pretty good about where we are right now. That being said, there are some opportunities still brewing underneath the surface, but it's not so much in the high flying growth and tech names like we've seen over the last few months. And I think this is being partially represented by the Nasdaq lagging today. We had a pretty hard sell off to wrap up last week. Nice short squeeze yesterday on Monday, and today we're giving back some of those gains. But I'm looking right at semiconductors, and it's interesting because there's a bit more tariff headlines coming about at the moment, specifically on semiconductors. And I think after the impressive run that we've had to the upside, this is the perfect catalyst for a bit of a sell-off and a pullback for ultimately what I believe will be another tremendous buying opportunity. So I want to be very clear. Short-term pain, long-term gain. I'm looking to buy the dip, but I'm pretty conservative right now, not really trying to push the issue in a lot of these tech names. In fact, the big news of the day is Palantir that hit its target of 175 that we had previously. That was a Trinity trade name. We booked profits on that on the first half of the position for 37%. But that's kind of been, the name of the game that we've been running recently. Even Advanced Micro Devices was a full Trinity trade position. We've since reduced it, booked that for 40% plus gains. So I still have some runner positions. I just think over the next couple of weeks, this isn't where you're likely to get the most amount of outperformance. And you take a look at some of these big tech names, pretty much all of the Mag 7 names have reported except Nvidia, and they've all have exceeded their earnings expectations. Apple hanging on onto support here. I'm looking at Amazon, nice rebound today that is responsible for a lot of the gains that we're seeing in consumer discretionary today. Then you have names like Meta still hanging out near the highs, but pretty much consolidating its gains. Similar to Microsoft, it's really hard for the market to drop when you have these names that are just such a big part of the indices holding up so nicely. But one of the reasons why I'm concerned is coming into this week, we did see utilities as the best performing sector in the market. And in fact, last week it outperformed, and it outperformed by such a wide margin that it actually emerged as the best performing sector over the last month. So that is a concern in of itself. And it's something that suggests near-term caution, especially now because utilities are kind of threatening to be the best performing sector year to date. And I've been getting the question a lot in TheoTrade chat, and it's a very good question. Has the defensive nature of utilities changed because of all the AI-related expenditures and expansions we're seeing in the sector? And it's a good one. It's a very good question. But earlier this year, when we saw the market blow up, utilities were leading before that. So it's really too early for me to say that, hey, this time it's different because I don't think it is. But two, I don't think it's going to lead to a sell off along the lines of what we saw going into April. Again, I think the main focus here needs to be buying the dip. So, that being said, a lot of the opportunities that I'm seeing right now are actually coming from the precious metal space. I really like what's happening in gold and silver right now. And it's interesting because, precious metals have been something that has zigged while stocks have zagged earlier this year. So, we're watching a few setups in this space, actually shared a few trades today with TheoTrade members and already had some exposure in the Trinity trade, increased our exposure in the $1 million challenge portfolio as well. But you take a look here at the ETF level. GDX up quite a bit. You're seeing silver spot outperforming gold spot. Silver miners are up just about as much as gold miners. So to me, this is a very risk on signal for the mining and precious metal sector specifically. So I like what's going on here. Also seeing some encouraging price action in bonds. We've been looking for a low in bonds in a rally higher. It's been a bit tricky and a bit slower than expected, but it seems like we are starting to pull through here. And, I am looking for this to continue higher. Now, the odds of a September rate cut are somewhere around 90% plus. So that is pretty encouraging for rates to come down. And ultimately, I think it's going to be part of the Fed blowing a massive asset bubble once again. And it's going to help the tech sector quite a bit. So, again, I want to be very clear and reiterate this. Short-term pain, long-term gain. Even if we see a little bit of volatility in stocks, I'm really not expecting more than a 5 to 8% pullback from the all-time highs in the case of the S&P and the Nasdaq. The Dow Cash has not made a new all-time high yet. But even there, I think rates coming down are going to be a real tailwind for various areas of the economy that have been rather depressed, looking at real estate specifically, bigger tailwind behind tech. And, the question will be how long will it take for some of this money to eventually make it to commodities? Because I'm not an energy bull right now. I think you want to avoid energy this early in the economic expansion because we almost slipped into recession, guys. Let's not forget that. And so there's going to be some changes in some of the leadership positions. Powell's got a few months left, realistically, and it looks like rates are going to start coming down before he even leaves. So the question is how low will they go? And what's that going to do to stocks? I think it's going to send stocks higher. I think it'll eventually trickle into energy and crude oil, specifically Bitcoin and Ethereum. I think we just need to be patient here. There's nothing bearish about this chart. Here, too, it's a buy the dip market. I still like both of these very much. I prefer Ethereum. Ethereum is the best performing asset basically since the April 7th low, and I think it is still the asset to own going into year end. So that's what I had for today. Thank you everyone so much for watching. I hope to see you in the TheoTrade chat room. Talk soon.